Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra, with me is Ekta, and for the markets right now, in the past 40 minutes, we've moved in and out of the green thrice. So we've seen a very, pretty much a flat move for the past hour or so. Right now, it's just around 12 points in the green for the Nifty. We have the Nifty Bank also, which is absolutely at the flat line. So that has come off a bit as well, just around 20 points higher over there. But all through this morning, we have been seeing the mid-cap index underperforming today, right? So that is down around 60 points right now as well. Advanced decline completely neck to neck. But Ekta, maybe a little bit of caution on the street ahead of the big global Q also that we are tracking today.
Hi, Pavitra. Yes, absolutely. We have the impasse over the debt ceiling in the US. But besides that, the more relevant piece of data which we will be dealing with will be the US CPI data for the month of April. So I think the street will be watching and bracing themselves for that. And let's see, that'll probably pave the way in terms of what the Fed could do. Remember that the employment data was better than expected, but the street is anticipating that, maybe the Fed would probably even see through that. But nonetheless, we do have a lot of queries lined up for you. Joining us this afternoon, we have Rajat Bose joining in on the technicals, and we have Sharad Avasthi, who's the head of PCG Research, who's joining in to answer all of the fundamental questions. Rajat as well as Sharad, welcome to the show this afternoon. Well, let's start the show with a query on Maruti Suzuki. The stock has been on a surge really for the last 10 straight sessions. Getting back to the question then, Ronak holds around 10 shares of Maruti, which he had bought at around 6,785 rupees. So he's sitting on a huge profit there, and he wants to know whether or not to book his profits when it comes to Maruti. Sharad, what would you recommend on Maruti? A lot of those auto stocks have actually been doing well. Even say, for example, a Bajaj Auto has been one of the top gainers on the Nifty this year itself. Do you think there's just inherent strength which is coming for the autos this time round? And where would Maruti be in context of that?
Yeah, I think in general, the auto space should do very well. Firstly, there is a pent-up demand issue that they have. Most of the automakers have an order book which they have to cater to over the next 6 to 7 months. And in addition to that, the logistic issues, the chip availability issues, both have come down very substantially. Raw material pressure has come down. So I think in all, most of the things are sitting very positively for them. And gradually you should see an improvement across the board. Even the export market should improve, so that should help. Gas prices have come down. Specifically for Maruti, I think the gas prices coming down is a very big trigger for them, because they have a lot of CNG models available within the basket. And beyond that, the new launches that they are doing should get very good traction. We are very bullish on the stock. I think next 2 years we should see very good growth in terms of top line and bottom line, specifically more so in bottom line terms. The new launches should get very good, are getting very good acceptance. Even the other 2 launches that are planned should get very good acceptance. The domestic side, they are focusing more on the CNG type fuels and R&D on those issues, and the global partners are focusing more on the EV side. So both combined, I think they should be in a sweet spot, and growth should be very robust. So considering it trades at 25 times FY25 expected numbers, I think 10,500 is the target that we are looking at.
Okay, got that. Let's also bring in Rajat on this. Rajat, Sonia was telling us earlier the stock is up almost 8% since 25th April. That is in the past 10 sessions. It's just around 9% off its all-time highs as well. Do you think this momentum is likely to continue in the near term, and you should perhaps hold on for at least a bit?
See, first of all, thank you for having me. The point is that regarding Maruti, what I would like to say is that if your horizon is for the short term, then there could be some volatility, because it has already, as you said, that in the recent past it has shot up quite a bit. In fact, from 86, 8500 kind of levels, and it has come up to say something like 9100 currently. So it might show volatility, but at the same time, I would say unless it falls below 8900, even for the short term, you do not have much to worry. And Maruti looks good. Bajaj Auto, you brought in the comparison. Bajaj Auto was an underperformer, while Maruti wasn't in the last, say, 2-3 years or so. So Bajaj Auto had a big run, very sharp run from 3700 to 4500 plus, But then the problem with Bajaj Auto is that it can correct much further than Maruti would. So Maruti, one should continue to hold for the short term, for the medium term, and also for the long term. Currently, what I can project is 9,600 to about 9,800. Only when this level is taken out decisively, then we can project for higher levels. But for now, I would definitely suggest the investor to continue to hold on to Maruti.
Okay, that is the call on Maruti. Let's also bring in our next caller now. We have Shashidhar, who writes to us from Bengaluru. He's actually on the line with us, and he has 230 shares of Aditya Birla Fashion and Retail, which he bought at 220. Shashidhar, hi, good afternoon. Please take us through your query.
Hi everyone. Thanks for having me here. So I just wanted to know the future growth of the Aditya Birla Fashion, because it is recently, buying all these companies, and recently it bought the CNS. Yeah. So I just wanted to know the future growth of it, and should I continue to hold on, because currently the raw materials are being reducing, and it's a good opportunity, or should you guys wanted me to switch to another stock, or I just wanted to know.
Okay, so you bought at 220. It's currently at 200, but there is that acquisition that you were talking about, which is also important to consider. Sharad, coming to you on this, how would you look at this stock, Aditya Birla Fashion, and also, of course, the acquisition of TCNS Clothing?
Firstly, the company as such has excellent brand positioning. Most of the brands at the domestic level or at the international level are leading brands that they have. And with the urbanization story and everything happening, that should play out very well in the long term. The TCNS acquisition also, I don't think is very abnormal in terms of valuations or anything. The only point is that the balance sheet is already leveraged with the type of acquisitions they have done over the last 2, 3, 4 years. And now this additional 800 crores is going to put further pressure on the balance sheet. How they plan to raise it and how they raise it. If it's equity only, then it's not a very big issue. But then dilution also comes in. And in terms of earnings, over the next 2, 3 years, we are expecting the earnings to more or less double from here to around 5-6 rupees per share. But I think the fair value to assign would be based on an SOTP. So I think 260, 270 is the fair value on the stock. But the only thing is that with this debt overhang and with this new acquisition that they have done, it could need a bit of time to recover. But as he rightly pointed out, the raw material side cushion has come in for most textile players, and for them also it should be very beneficial in the long term. And urbanization as a trend should keep going up. So I think initially hold for a target of around 260, 270. The stock has already corrected substantially from the higher levels. So I don't think exiting or worrying too much at these valuations makes much sense. Strong brand positioning. So I think hold for targets of around 260, 270 on the stock.
Okay. Rajat, tough to give a technical call?
Well, technically, I would point out to certain recent developments on the chart. That is, after there had been 2 very huge volume days on the upside. Once was 6th of April, and after that, day before yesterday, there had been more than 8 lakh shares were traded. But in this chart, what I notice is that whenever a huge volume up day is followed by a huge volume down day, and the stock pushes itself down further, that means it is the beginning of another downtrend. And the optimism that was generated since 6th of April has evaporated. If it were to close below 200, then it is likely to head down, and it could go considerably down further unless it recovers above 230, 35 kind of range. Only when 260 is crossed, this would become a buy, because at that time you would know that the long-term trend has changed. But for now, I won't really recommend. There are other textile stocks that are looking far better on charts compared to this, so I would suggest getting out of it.
Okay, all right. Suggest getting out of AB Fashion and Retail. Let's get to another query then. Prakash Prabha writes to us from Bangalore, holds 175 shares of Tata Steel, which is bought at 85, and 100 shares of ONGC, which is bought at around 145. He's a medium-term investor, wants to know whether to hold or sell at current levels. Both frontline stocks. Rajat, your recommendation on both of these technically, currently sitting on a profit?
Apart from ONGC, what was the other stock?
Tata Steel.
Okay. First, I take ONGC. ONGC definitely one should continue to hold on because it is looking pretty good. In fact, it can move further up. Immediately, you can look forward to a target somewhere between 175 and 180. Once that is taken out, ONGC might test 198 as well. And regarding Tata Steel, that's also looking quite good. In fact, better than ONGC because there is a good buying opportunity here. And put a stop loss, I would say below 105, and expect in the near term, meaning the next 3 months or so, say 120 to about 125. If 125 is taken out decisively, then you can expect further upswing here. Buying opportunity wise, Tata Steel looks better, but bullish strength for the medium term as well as the long term, ONGC is a better stock.
Okay, got that. And thoughts on Tata Steel as well?
Sorry?
Okay, I'm going to ask Sharad as well on this. Sharad, if you could come in on both Tata Steel and ONGC as well.
Yeah, so Tata Steel, I think he can continue to hold. The cycle doesn't seem to be bothering too much on the metal side. Specifically, HRC prices have been going up over the last 6-8 months, one of the only probably base metal that has been going up. So that should remain positive. The additional cost that they have to incur for green manufacturing and all that comes into play. But that's largely for the European operations, and even in the Indian operation, that should play out. But I don't think there is a material risk to the realization front that prices will drop substantially. And I think the numbers would be somewhere around 13-14 rupees in terms of earnings over the next 1.5-2 years. And considering 9 times, I think 135 is the fair value for which he can continue to hold on Tata Steel. And for ONGC, I think the dividend yields, etc., are very good. They are still hovering at around 8-9%. I think if the stock does get you a movement to somewhere around 200, 225, then I think that is where you can book profits. Even at current prices, you can book partial profits and exit out of ONGC because the recent developments out of the Russian oil fields and everything is not very positive for the company. In addition, the legacy oil field realization recommendations that have come in from the Kirit Parikh committee are also not very favorable for the company, and we are not of the view that oil is going to be in a very bullish trajectory over the long term. So I think ONGC, you can start booking some profits now and gradually exit as it moves up to say somewhere around 200, 225, where the dividend yield would probably come down to around 6-7%. So I think ONGC book partially now and exit around 200, 225. Tata Steel, I think 135 is the fair value. You should continue to hold on.
Okay, all right. So those are the Sanofi numbers on your screen where there's been a dip which has come in on the profitability. So that's down around 20% on a year-on-year basis. And it's been a flat performance on the revenue as well as just a little higher than around 700 odd crores. But the margins have improved. So that's really resulting in what the stock actually being resilient at this point in time. So net profit down around 20 odd percent. We need to see the P&L because there could have been maybe a higher tax outflow which could have resulted in a lower profit this time. Revenue up around 4.2% as you can see on your screen, just about a sub 5% figure in terms of growth this time for them. EBITDA, however, is done better, up around 18 odd percent. So that's Sanofi for you, just about holding with a marginal gain at this point. We'll take a short break, but up next, more queries. Stay tuned. Welcome back. You're still tuned in to Your Stocks this afternoon. We have with us Rajat, Bose joining in on the technical, Sharad Avasthi to answer all of your fundamental questions this afternoon. Well, let's get to the next question. We have Gitika, who writes to us from Madhya Pradesh. She holds 50 shares which she's bought of ICICI Bank at 500 rupees. And she's a medium-term investor, wants to know what to do and which other sector other than banking can she invest her money in. Well, that's an interesting question. Sharad, what would you recommend? Not banking. One, what would you recommend her to do with ICICI Bank? She's sitting on a hefty profit at this point in time. And secondly, anything she could look at outside of banking, which sector?
I think firstly for ICICI Bank, she should continue to hold. I'm very bullish on the banking sector prospects, more so on the private sector side. And I think even ICICI Bank, after the last 2-3 years, the way the management has changed and the way the work culture has changed at the bank, it's very positive for the bank. Next 2 years also, we expect earnings to grow at around 15-16%. So on a price to book basis, if it trades at somewhere around 3 times also, I think 1150 to 1200 could be the target you could be looking at for ICICI Bank. So I think that ICICI Bank she should continue to hold. As far as other sectors where we think that investments can be made, I think one contrabet could be IT, where the correction has been very sharp. So if you're looking for a frontline stock, Infosys is a good bet at these levels for targets of 1750, 1800. And if you're looking at a slightly smaller company that can have a lot of re-rating, I think LTI Mindtree could be a very good bet over the long term, where you could have multiple re-rating factors kick in as the merged entity starts to operate. So I think IT is one space. PVR could be a very good story you could look at amongst the film exhibition business, which has been very downtrodden right now because of the advent of OTT and everything. But I think that should gradually pick up. So that could be one space. AMC stocks could be a very good bet, contra bet, where they have not performed much, but the long-term trajectory remains very strong. Any AMC stock, ABSL AMC, UTI AMC, HDFC AMC, even Nippon Life. In Nippon Life, most probably your dividend yields are also around 5, 6, 7%. So I think these are the sectors you can look at.
Okay, you've given a lot of options, so I'm sure that'll help. The next query comes in from Satish HB, who writes in from Chennai. He holds 250 shares of BPCL, which he bought at 472. He's a medium-term investor and wants to know whether he should hold or sell at current levels. Definitely sitting on a bit of a loss over there. It's corrected around 100 rupees from the buy price. Sharad, what would you do on BPCL from a medium-term perspective? So it's already, corrected quite a bit. Do you think there's scope for it to be made up in the medium term?
Yeah, I think we are looking at earnings of somewhere around 45, 46 rupees consistently for the company. And as I told earlier, that since you are not expecting oil prices to do anything great on the upside, rather they would remain subdued or correct gradually, that should be very positive for BPCL, and demand should be robust. Most of these refineries companies are getting into hydrogen projects as well. In the long term, that should benefit. So I think for BPCL, my fair value should be somewhere around 450, 475. So I think you can continue to hold for that target.
Okay, all right. So those are a lot of queries coming in today. It's a lively market, a lot of stocks in focus. Yeah. So I'm sure a lot of people have queries in terms of, what they should do with their portfolios. But next we have Radhika, who writes to us from Hyderabad. She holds 150 shares of Sri Renuka Sugar, which she's bought at around 50 rupees per share. She's a medium-term investor and wants to know what to do, hold or sell. Sharad, that is the question. While a lot of people are making money on specific stocks in such markets, there are still people who are suffering in selective stocks, especially, say, within the broader markets where, there is more uncertainty. Can you give us a sense in terms of what you would recommend on a stock such as Sri Renuka? And what would you recommend in terms of, say, one or two stocks which you would be most bullish on within the broader markets?
I think Renuka Sugars, I would avoid only if you want to play the sugar space the way sugar prices have run up internationally. I would be more comfortable going with the frontline leader, say a Balrampur Chini or something like that, rather than go in for some leverage story, some turnaround kind of story. So I would not be comfortable buying a Renuka Sugar. It's better to switch to a market leader. And the other problem that you told is very rational, actually, that people do get bought out into stories too much. So I think have a sane head in place, buy into stories that have some fundamental aspect to them, whether it's long term or short term. And just buying a story because, say, for example, an EV theme, so anything that connects with an EV, everyone starts buying it. So don't just go ahead and buy anything and everything outright. ITC is a classic example. People were not buying it. So I think if within this space, in the small cap, mid cap space, I think the stories like Tejas Network could be a very good story in the long term. Sterling Wilson Solar could be a very good turnaround story in the long term. Borosil Renewables could be a very good story in the long term. So these are some of the stories, and there is a whole bit of contra stocks that you could look at. Balaji Mines has corrected a lot. That could be a very good story in the long term. So there are stories that are fundamentally good, but they are going through a rough patch. Some of the pharma stocks have finally started to move around, something like an IOL, Aarti Drugs, Laurus, Alembic Pharma. These could be stories that could see very strong turnaround, even for that source, even Natco. So there are stories that are seeing a turnaround where the numbers could return to the mean, the margins could expand. Forward growth should be good because the RM pressure is easing. So I think these are stories, and there are stories where you have structural growth aspects, like for renewable energy, like we said, Sterling Wilson and Borosil, they have a structural advantage in terms of the solar penetration. So go for stories where their sound management's valuation is not absurdly mad. Tejas is now a Tata company, so sound management, you can go in, the 5G acceleration and everything should help.
Yeah. All right, got that. So Sri Renuka perhaps not so bullish on, but you've given us a bunch of other options. On that note, Sharad and Rajat, we're going to wind down today. Thank you very much for joining us and taking our viewers through all of those queries that they had. It's a wrap on this edition of Your Stocks, but remember, you can always email us your queries and we will address them with our experts. Stay tuned. Closing bell comes up for the final hour of trade.